checking out the SPX index chart. Close 63, 68, 86. Well below the support at 64.90 and the JPM collar at 64.75. Like most stocks, also within a low volume node here, all the way down really into 6100. We do have the secondary 38.2 here at 61.74.39. Which should act as the next support, but really volume down here in the 58.70 up into the 6,000 range really. So I wouldn't be shocked if we do come down, if we don't undercut this 61.74 to try to test down into volume for the recovery up. If that does occur, then I would probably set up the potential bottom just to come in and recover back up into 6,500. Again, assuming so there's some sort of remedy to the issues that are currently existing in the Middle East. This is the NDX index. You can see pretty good clear indication. We dropped out of the high volume node up here in the 25,000s, currently working our way down through this volume, low volume node, also just below price, from about 20, let's just call it 23,000 down into 22,000. So another 1,000 points or so of lack of structure here in the chart. We do have the secondary 38.2 at 22,500. So that will be, we'll look for that for next support point. And just like the SPX though, the volume is lower than the retracement itself. So volume into 22,000, and then the fib at 21,362. So both of these achievable targets to the downside through time, I would think, especially with how some of the top weights are set up, having those structural issues as well. This is the crude chart. As you can see on the daily, we hit that spike high, and we've really just consolidated since then, trading in between the fourth term and fifth term, 61.8 at 86.34 and 102.5. If we break out of this, which I would assume we will, 102.5, 110, 120, and 142 as the next upside targets. For crude, there is quite a bit of volume up at the 140 level from trading all the way back here into the 2010s. So we may see some blunting there at the 140, 150 range. But for now, pivot for crude 102.5 with first support at 91.5. Just a second back on the SPX as well. We do have, the JPM collar comes off on Tuesday, midday-ish, kind of late midday-ish. So if the market does find the ability to bounce tomorrow, Monday, and get closer to this collar, we can have like a sticky action from that collar itself. Obviously, high risk, assuming that we still have everything going on in the world, but that is a possibility for that collar to kind of grab and hold price if we do manage to bounce up and out of this. If we break any further away from it, that's not even going to be a potential, just offering that retest all the way down into the 6200s then. So we'll have to see Monday if we do get any sort of bounce to try to clean up this structure from yesterday or from Friday, close that gap, and then kind of pin up around the collar until Tuesday when that rolls off. But again, that assumes no escalation of the situation. So we'll just have to watch these charts and see how things develop. But for now, things still look a little dicey out there.